Good morning, everyone. Thank you for joining us. My name is Mari-Liis Mietop, and the results for the second quarter and the first half year of 2019 will be introduced by the CEO of Kapital, Paolo Michelosi, and CFO, Angelika Annus. We will answer your questions after the presentation. Please write them on the question box and I will read them out loud and pass on for the answers. This webinar will be recorded and later available on our webpage procapital.com and on the Nasdaq Baltic YouTube channels. We start with the business highlights, after which Angelika will give you an update on the finances. But now I will hand over to Paolo.
Good morning on my part as well, and thank you for joining us. I will highlight the most important from business side, and I will give an operational update after Angelika has taken you through the Q2 and 6-month financial result. Our current portfolio holds a number of very important and prestigious residential and commercial development projects, either ongoing or upgoing, in Tallinn, Vilnius, and Riga. In addition, we have a long-term experience in developing and operating shopping malls. Our shopping mall project, the one Mall of Tallinn, starting operating in November 2018, and Ferris wheel on the top is welcoming guests as from April 19. The emphasis of the entertainment through a wide range of restaurant, feminine, and other activities, cinema as well, it is proven to be warmly welcome. Of course, we are still in growing process with following opening and have been focused on building a well-balanced mix of tenants, above all for shopping, which would complement the T1's value position. Our residential developments are going very well across the area of operation. In Tallinn, we are currently building the last 3 houses in Christina Houses development, which is part of Christina City Quarter. A truly unique area development that has already proven to be very successful amongst the customers, and more than 85% of the apartments are being pre-sold. Another project which has received a very active interest is the prestigious Calavana residential quarter. This project has been incredibly popular with the pre-bookings, although we have not yet started with the official sales activity. In Riga, by the end of June 2019, our sales revenue from the luxury residential River Breeze residence were 4.2 million euros, including VAT. This is by far the strongest result in the luxury segment in town in 2019. And in Vilnius, we have developed an old factory area on the border of Old Town. It's a highly valued residential area named Saltinho Namai, where we have finished the construction of the 5 premium apartment houses on the second stage of this area. Saltinho Namai Attico is called. I'm proud to say that it is one of the first developers in Lithuania that has recognized with A++ energy certificate. I will now hand you over to Angelika for a closer look of the Q2 and 6 months financials. Thank you very much.
Thank you, Paolo, and thank you, listeners, for joining us. We have started the year with good results, closing 6 months with 22.5 million euros total revenue, which is an increase of 49% compared to 15.1 million euros during the same period in 2018. The revenues of the second quarter increased by almost 4 million euros, which is an increase of 47% comparing to the same period last year. Gross profit of 6 months has increased by 63%, constituting 8.1 million euros, comparing to 5 million euros in the first half year last year. Gross profit of the second quarter increased by 800,000 euros, which is an increase of 25%. The net result of 6 months remained negative, as it was at the end of the first quarter. 2018 results of the period included one-time effect of revaluation of investment property with a total positive effect of 1.9 million euros. The bottom line of 2019 is influenced by significant interest cost of investment loan related to T1 property. Interest costs were capitalized into investment property until end of 2018 and therefore did not have effect to the profit and loss statement earlier. Revenues have increased in real estate sales and rental activities. The real estate sales revenues are recorded at the moment we sign notary deeds and hand over premises to the buyer. Therefore, the revenues from sales of real estate of the company depend on the completion of the residential developments. Operating profit of the first half year in 2019 was 5.1 million euros compared to 4.4 million euros during the same period in 2018. In the second quarter, the operating profit was 2.4 million comparing to 3.7 million in 2018. Marketing expenses have decreased by 36%, while administrative costs have increased by 19%. As said already before, 3.7 million euros included extraordinary profit of investment property value increase in amount of 1.9 million, which were recorded as other income in 2018. Financial expenses have increased more than 3 times, which is related mostly to the investment loan of T1 as mentioned before. 3.5 million interests were recorded during the first 6 months and 1.8 million euros in the second quarter in relation to this loan. The net result of the first half year was 276,000 euros loss compared to the 2.8 million profit during the same period in 2018. The net result of the second quarter was 163,000 euros loss comparing to 2.9 million euros profit in 2018. Kapital Grupp has operations in 4 geographical segments: Estonia, Latvia, Lithuania, and Germany. We also monitor our operations through business activities, which are real estate sales, rental activities, hotel operations, and maintenance services. In Estonian segment, real estate sales of 6 million euros have decreased by 2 million euros comparing to last year. Last year's revenues were driven by completion of Marsi 6 project and 2 apartment buildings of Kristina Houses project in Kristiine City. This year, we have completed only 1 apartment building of Kristina Houses project in Kristiine City so far, and we are selling available inventory. The final 3 buildings of Kristina Houses project will be completed before the end of the year and will influence the results of the second half year. Rental revenues are generated by T1 Mall of Tallinn, which started operations in November 2018. Maintenance revenues have decreased significantly comparing to last year. This is due to the company's decision to stop maintaining premises which are not related to our current or future developments, and to hand them over to other maintenance companies. Maintenance business generates low margin revenues and we want to focus on our core business. Latvian segment has generated 3.9 million euros revenues from real estate sale by selling luxury apartments in the River Breeze residence, which remained at the same level comparing to the last year. Rental and maintenance businesses are insignificant in Latvia. In Lithuania, we see quite a significant increase in real estate sales revenue due to completion of 5 new buildings in Šaltinių namai Atiko project, which was completed in June. More than 40 apartments have been handed over to the clients by today already, and more than 30 should be yet handed over. Less than 1/3 of the apartments are yet available for sale. In Germany, we are operating a hotel in Bad Kreuznach. This year started slowly, but the sales were picking up in the second quarter, reaching the same level of revenues as in 2018 by the end of the half year. Here you can see more detailed information about the second quarter, but I believe that the half-year results are more giving a better view of the whole position of the company. "96% of assets on the balance sheet consist of real estate portfolio, which include inventory 23%, which is consisting of premises ready for sale and properties under construction. Investment property is 69%, including long-term projects waiting for start of development and our main rental property, T1 Mall of Tallinn. Paolo will give you later more thorough overview of all the projects. The rest of our portfolio include German hotel property and Tallinn office. Our equity ratio at the end of June is 40.35%. Our debts consist of 70% long-term portion and 30% short-term portion. Total assets have increased by 26% in 1 year. Main portion of current assets consist of the inventories which remained at the same level over the period. As mentioned before, we recognize two kinds of inventories: premises for sales, which include properties in all the Baltic capitals, and premises under development. When we are actively developing, the inventories are increasing, and when the premises are sold and handed over to the clients, the inventories are decreasing. Non-current assets have increased approximately by 53 million euros, mainly due to completion of T1 Mall of Tallinn project. The increase is resulting from capitalized cost of construction plus revaluation effect at the end of 2018. According to independent valuator's valuation, the fair value increased by 18 million euros. Non-current receivables increased by 3 million euros, consisting mainly of two components. 2 million euros deposited on separate bank account to secure T1 related interest payments, and 1 million euro accrues income related to implementation of IFRS 15, which is related to rental income in T1. Total liabilities have increased by 32% in 1 year. Our debts include bank loans and bonds. For development, we usually use bank loans, mainly for a short period of time, 1 to 2 years. T1 development is an exception due to the scale of the project, and the financing was agreed for 5 years period. For corporate purposes, we have issued 3 kinds of bonds. Convertible bonds, we had 7 different issues. They carry 7% interest. They are not secured. They mature each 2 years. And investor may exchange the bond into the share of the company at the price of 2.8 euros. Remaining balance of these bonds is slightly above 10 million euros. Usually, investors prefer to prolong them by another 2 years at maturity and not to redeem. Historically, none of the bonds have been exchanged for the shares. We have also non-convertible secured, callable 8% interest rate bonds, which mature 1st of June 2020 and are recorded therefore already as current debt. The total value of the bonds is 29.3 million. Then we have also non-convertible unsecured bonds, which are maturing in 2019. Half of them have been redeemed already in April, and the rest will be redeemed in September with redemption value of 300,000 euros. Custom advances are related to pre-sale agreements. We collect usually 10 to 15% prepayments upon signing pre-sales agreements. Current payables are related to our active development activities and large construction invoices. Other non-current payables are usually related to guarantee amounts withheld from construction invoices. Depending on the timing, they might be reclassified also into current payables. The company has issued 56.7 million shares with a nominal value of 0.20 euros each. The registered share capital of the company is 11.3 million euros. And the company has collected 5.7 million euros capital over par value and has formed a statutory reserve of 1 million. Revaluation reserve is related to German hotel property. The increase in value is not recorded through income statement, but through revaluation reserve. In case of exit, the profit from change in fair value will be recorded through income statement. Company's retained earnings are 76.5 million euros total at the end of the reporting period. Kapital Group has a potential possibility to distribute dividends without income taxes payable. This reserve consists of historical dividends received from Latvian subsidiary and undistributed paid-in capital into Aktiesēls Kapital Grupp. The total untaxable potential distribution constitutes 122.6 million euros, which gives us a contingent tax asset of 30.6 million euros. As you can see from this illustrated slide of cash position, our normal activity shows negative flows in investment activities and positive flows from operating and financing activities. The only exception here is for Q2 of the reporting period, where we have recorded a deposit of 2 million euros in relation to T1 property loan. Our operating cash flow was positive during 6 months, but 2.7 million euros less comparing to the same period in 2018. Cash from investing activities has shown a significant decrease as main object T1 Mall of Tallinn Shopping Centre has been completed in 2018. Cash generated from financing activities decreased also for the same reason. I thank you very much, and I will now hand you over to Paolo for the update on our operations.
Thank you, Angelica. Kapital is one of the most senior developers in the Baltic market. We have more than 25 years of experience here. The market has changed rapidly during this time, which I'm sure is not a surprise. However, each market is still relatively different, and those would need to adopt it to learn the market trends, but is equally that allows us to use the know-how on a group level. As the real estate market is heavily depending on the geography and demographics and social political situation, we will give you an update of those aspects that have the utmost influence on our business today, but also for the future. Estonia real estate market has been growing quite fast for recent years and has now reached the balance in supply and demand. This is definitely a very mature market with high expectation to whole development project from quality of the construction, well-considered room planning, infrastructure for general living environment. This has put more emphasis on the developer's reputation, and each transaction is carefully considered and seen mostly as a long-term investment. Latvia has the most modest growth, mainly due to the local tax system and additional expenses that come in addition to the purchase of real estate. Due to that, the highest growth has been in the upper middle class market, and luxury segment where we currently operate has been rather difficult. However, to the legislation, we have already considered the market demand for the more rational room planning and growing longer segment in projecting of future developments project. Lithuanian residential market has been growing fast, has been continuously active for the past years due to the increase of population. Growing income and low mortgage rates have positive impact to the housing development in all segments. The luxury market, which in Vilnius is our main area of operation as it is in Riga, is expected to reach its peak in 2019. As mentioned, the Estonian market demand is very well balanced with offer. Most apartments are booked and sold during the course of construction. High volume of transaction has also been reflected in our sales in Christina City, where also large shares of transaction are being carried out prior to the completion of the buildings. Roughly 80% of the apartments are sold even before the construction of houses is finalized. From the last 3 houses of Christina houses, which are under construction, 17 flats out of 92 are already pre-sold. Another indicator is the high interest and number of booking in Kalarana residential quarters. To date, we have signed 90 reservation agreements for the residential premises in Kalarana, although we have not started the construction, not public sales activity. As I highlighted before, the T1 rental revenues given the sun is almost, if we are in summer, are going in better way, is likely to see the rise of number of shop visitors, and we hope that in the fall it will be even better. The fourth floor restaurant and entertainment area, as well as the rooftop ferry wheels we started operating in April 19, have proven to be very popular amongst the people and the city. In Lithuania, we have now completed 5 houses of Saltinio Namai Attico, which is truly a beautiful residential quarter right on the border of the most tranquil part of the old town Vilnius. From 110 apartments in 5 houses, by the end of 6-month reporting period, we have already sold 80%. The Lithuanian market, especially in the luxury segment, is highly evaluating the sustainable long-term mindset, and that gives the customer the confidence to the real estate investment. That is why I'm very proud to say that the completed 5 houses in the Saltinio Attico are one of the first buildings in the Lithuanian market that have been recognized like an A++ energy certificate. As mentioned before, the Riga luxury market has presented quite many challenges within the recent years, mostly related with the registration and tax policies. Thus, I'm very glad to acknowledge that the outstanding River Bridge residence has been market leader in sales, with 4.2 million in sales revenue within 6 months in 2019. We are also continuing with the following phases of the residential area. This is for the time. Should you have any questions, I would like to discuss further. Thank you.
Thank you, Paolo and Angelica. Please now feel free to ask questions. You can write them on the questions box and I will read them out and hand over to Paolo or Angelica for answering. Yes, I see. Well, give me 1 second and I will read. I see there are a couple of questions here already. The question is, what is the vacancy level in T1 currently?
We are around 20% vacancy, and we are very actively having negotiation for new tenants.
Also, we have another one with regards to interest rate, and the question is, what is the interest rate of Lingen Agent investment loan?
A policy of the company is always not to disclose the interest rate because of possible future competition with the lenders if we are going to refinance any project.
And next question. Do you plan to refinance 2 million fixed rate bonds maturing June 1, 2020? Bank loans or new bonds issue?
We are evaluating different kind of chances. Then most probably I see that the bonds, refinance bonds with bonds is very popular in this moment and very welcome in the market, but we are evaluating very many different chances.
Why aren't interest costs not capitalized in 2019? Angelica will take this.
According to our accounting standards, we may capitalize interest costs during construction period of large-scale developments, which last at least more than 12 months. As we consider T1 completed by the end of 2018, we are not capitalizing these costs anymore into investment property, but we record them into profit and loss statement.
Thank you. A couple of months ago, there was a press statement about active negotiations about refinancing. How are those progressing?
They are all in progress with many different opportunities.
And there is another one with average interest rate.
Let me answer to this. Yes, we haven't currently disclosed in our regular reports average interest rates, but considering that you are interested in this question, we'll start disclosing it with our next report.
That's it for questions at the moment. We will give it a little second. Maybe there's some more questions. Oh, there is one. Some months ago, there was a statement in press that Kapital may pay dividends soon. What is the current outlook?
Not any decision is taken yet in this position.
Thank you, Paolo. Any more questions? At the moment, it seems like there is no more questions. Should you have any more questions, you can send them through via email. We're always happy to take them. You can do so for marilis.top@procapital.com. But until then, we will announce the webinar recording shortly. And we are very thankful that you've joined us this morning, and probably hear you next time.
Thank you very much.
Goodbye, thank you very much.
Have a good day.